Hey everyone, welcome back to CryptoCache. Thanks again for joining me here. Hope you're having a great day. Quick look again at Ethereum, double checking a couple key factors. So we talked yesterday, we got this nice perfect little bounce down there off about 33.60. So our long from 33.90 ended up working out pretty well for us here. If you take a look here, we can see roughly, hold on, these are my day trades. Matic, Litecoin, Cardano, Solana. We have, there it is, 20% profit there from Ethereum in roughly 2 days. That's just a 10x leverage trade. We got good 20% there. We also got a Caspa trade. That's a 5x leverage over about 44%. So nice little week here so far. So what we want to do is kind of talk a little bit about the backend data, just kind of see what those liquidation levels are at, because a lot of liquidation got swept here, and we want to know if, is the price just going to pull back? Is it going to continue higher? Where are we at now that that's happened? Well, the truth is we don't have a ton of liquidation that's been swept. 3,500 upwards of 3,600 is a massive amount of liquidation. So keep in mind, we have just as much liquidation to the downside, almost 2 or 3 billion in this range here at about 3170. Okay, so Bitcoin loses bottom at 60,000, continues to progress towards 56,000. We could see something along those lines. Between now and then, though, it's pretty safe to presume the price is more likely to go up than down to sweep these extra levels of liquidation. Again, so 3,500, 3,600, pretty solid amount of liquidation above the price. We do take a look at the last month. We can see roughly a similar scenario there. There's that $3,200 mark, but above the price, massive amount of liquidation. Somewhere between each bar is about 6 billion. So we're looking about 12 to 15 billion dollars in liquidation at 3,900 even. Okay, so we're ways away from that. Don't think it's going to happen right away, but just know we get closer to that, it'll work as a magnet to pull the price action towards it. Take a look at the daily though. Let's get back on track and kind of see here where we're at with the moving averages. And we can recognize here that we are still below the 50 and the 20. That's not great, but we're maintaining ourselves above the 100. So the 100-day SMA is letting us know about 3,400 is a solid support range. We've also got the 0.618 fib level at 3480 that we just kind of wicked up to here today. And there's a decent chance we'll see that initial rejection. That could already be happening right now. The likelihood of the price pulling back a small margin is great, because oftentimes you'll see more recent highs retested as new lows. We'll look at that here in a minute, but from the daily perspective here, it's getting better, but by no means is this perfect. We want to be over 50 on the RSI to have any legs to stand on. And money flow index needs to be higher. We don't have a tremendous amount of money flowing in the last 3 trading days. While minus Monday, there was a lot of buying pressure between 3,200 and 3,300. Okay, so that's roughly what we're looking at there for the daily time frame. If we quickly identify the 4-hour time frame, we can recognize that we're below the 50 and 100-day SMA. Okay, so that's generally where we're at. And if we do look at the moving averages here, or sorry, the RSI is over 50. That's a very positive sign. So again, we got some good mixed with some indifferent, but for the most part, we are majority of the way there. Okay, in other words, if we get over this 50-day SMA today, I think we're going to be in good shape. 3450 closure or higher today would be solid. Again, I like to be over 50 on the RSI and 50 on the SMA. That's a good combo. The truth is, though, we've broken our initial descending trend line. We have a larger descending trend line we got to worry about later, and that's running fairly concurrent with a 200-day SMA. So for the most part, again, we're looking pretty good, strong potential for the price to go further up. But once more, we cannot just naively, keep buying in, right? So here's where we're at here. First of all, again, this is not an exact science, but Elliott wave is starting. It's 1, 2, 3, 4, 5. So hypothetically, if we get a bounce off of this level about 34.30 or higher, we'll see our 5th and final wave up here. Okay. Again, this is just a crude illustration, just giving you perspective that we're seeing higher highs and higher lows, and that's a very positive sign. We're honoring our ascending trend line too. We look at the hourly too. We can confirm with the Ichimoku cloud, we're maintaining above the cloud, conversion lines over the baseline, lagging expense free and clear. These are all very good signs here for us, folks. Definitely something we want to pay attention to. So I feel like ETH is going to continue. What I think is going to likely happen is this more recent high. It's going to work as a new low, and we're going to see the price pivot or bounce off that 34.20 and continue higher, if it even pulls back to that level. What I might recommend too, if you're considering entry, maybe get a small percentage in here, add to your position there, and if heaven forbid the price comes down that point of control, you can add here as well as a tertiary target. I like to have 3 entry targets in my trades personally. Generally, I go with 25% in the first entry, 50 in the second, maybe 25 in the third, and just kind of average into my position. Make sure that if the price goes lower than that, it's invalidated. I maybe consider closing the trade. But averaging in or out of your trades is very recommended. Absolutely a good thing to consider doing. I talk about that in my trading university. Be sure to check that out. CryptoCache.tech is the site if you want to join up with that. Join us over on Twitter, Telegram, Discord, YouTube, TikTok now, and YouTube Shorts. A lot of fun there, and thanks again so much for the wonderful feedback. I hope you all have a great rest of the day. Thanks again so much for your time. We'll see you the next one. Take care.